This Spotlight on Income Planning is sponsored by American Retirement Systems, providing competitive solutions for agents and advisors. For more information, please visit AmericanRetirementSystems.com. Americans are saving far less than previous generations did, yet many maintain a distorted view of their financial strategies, according to a new survey. A poll this week from SavingsAccounts.com found that 49% of respondents believe they are doing a better job of saving money than their parents did. But according to data from the Bureau of Economic Analysis, Americans' personal savings rate over the past decade averaged just 3.48% of total income, compared with 9.63% 20 years ago. Meanwhile, 30% of those surveyed described their savings practices as worse or much worse than those of their parents, while 22% said they are saving approximately as much as their parents did. Many advisors focus too heavily on market returns rather than on their clients' overall wealth management, according to a new white paper. Titled Measuring Temperature with a Ruler, Is Your Wealth Manager Really a Return Manager in Disguise? The paper says that in some instances, portfolios with high returns compared with a benchmark may not be adding to a client's bottom line. Factors such as the timing of contributions and market conditions play a large role, while in many cases the portfolio may not fit the client's priorities or lifestyle, the paper said. According to David Loper, Chief Executive Officer of WealthCare Capital Management and co-author of the white paper, quote, "All this return measurement really has nothing to do with a client's wealth. All that's doing is really misleading clients to think that it does," unquote. Loper also said that wealth management strategies that focus too heavily on returns often place so much of the client's money in investment vehicles that they are not able to enjoy it. The paper adds that although investors usually focus on the problem of underperforming investments, they often overlook the threat of overperformance. According to Perry Chesney, a senior managing director at WealthCare Capital, many advisors urge clients to sacrifice their current lifestyle in order to be wealthy when they're old, a strategy that can produce other problems. Everything in the financial world is a trade-off, Chesney said. He adds that advisors must change the conversation when it comes to the way their clients manage wealth. Affluent investors, weary after weathering recent economic turmoil, are increasingly turning control of their portfolios over to financial advisors, according to a new survey by Spectrum Group. The survey found that just 47% of investors with a net worth of between $1 million and $5 million said they prefer to be actively involved in the daily management of their investments, down from 65% in 2010 and 69% in 2009. According to Spectrum Group President George Walper Jr., quote, "Wealthy Americans may simply be experiencing investor fatigue, prompting them to pull back and allow their advisors to take the lead in managing their assets," unquote. Just 45% of investors with a net worth of between $1 million and $5 million said daily portfolio management is a task they enjoy and want to continue, down significantly from 64% in 2009, Spectrum said. Among households with a net worth of between $5 million and $25 million, 50% said they want to take an active daily role in their portfolio, compared with 63% last year and 67% in 2009. For more industry spotlights, visit producersweb.com.